I previously did a video giving the thumbs up to Paycom stock. PAYC is the ticker. It's not hard to see why. You're talking about a long-term compounder providing a service, payroll automation and software. So highly recurring, 98% of its revenue is recurring in nature, generating lots of free cash flow, founder-led, reasonable valuation. That is the type of setup that I like to find. So when I see it, I'm going to call it out, give it the thumbs up that I did. And since then, looking at Paycom stock, it's actually up since I called it out, because I called it out a couple of months ago, up slightly since then. But zooming out, you can see it's still significantly underwater for investors, causing, folks to wonder what's going on here. Because, let's say a 3-year return of negative 70%. This is part of the reason why a lot of people get burned out of the market. And this is why it's important to separate the different variables that can drive returns. The 3 variables, and I always cover this, broadly in this channel. 3 variables stay the same, which is you have change in valuation, you have change in fundamentals, and you have the cash flow to shareholders. In the case of Paycom, you've seen a massive contraction in valuation, and that has significantly hurt the stock, despite the fact that they've continued to grow. Now, their growth has missed expectations, but they are still growing. So you can see that, they missed Wall Street expectations a bunch of times. That reinforced the lower valuation. And then you had change-ups with management, and there was, internal staff meetings that were secretly recorded, and, tensions over not delivering. They had a co-CEO that was promoted and then resigned a few months later. They also had a change, in their chief sales officer, who was replaced with Amy Walker, who had been with the company for 14 years, and now she's running sales. So, you don't like to see, a change with the CEO, change in sales. And then more recently, talking about the CFO resigning, that's always a red flag for me. So whenever I see that, I automatically pause, and I want to understand, because the CFO should have, they know what's going beyond, the surface level information that's going on. So, if a CFO is leaving, I want to quickly assess, well, okay, how long have they been there? Was this a quick turnover? Because the co-CEO, that was a quick turnover. So that reflects, maybe it wasn't a good fit, in terms of, maybe butting heads with the founder, Chad Richardson. So the CFO, that's always a potential red flag. So I want to dive into that, because that was something that was, discussed recently. And, I go to AI Ticker Chat. Now chat is completely free, by the way, so you can check out in the link below. We also have a share and potentially win contest for a free subscription if you're interested in sharing, your conversations on social media. But once again, chat is now completely free to use. And here's an example. So I said, I see that recently Paycom announced that the CFO was resigning. How long was he with the company? How old is he? And on the calls, did he mention why he was resigning? And this is the key aspect, which is that he's not a youngster. You're talking about a CFO that, he's not that old. I have parents that are in their mid 70s, so let me mid to late 70s. So let me say 60s. The youngsters. He's not getting old. 60s not that bad. But still could understand that he wants to retire. And then looking at this, what did he say? Why is he retiring? So he'd been with the company for, nearly 2 decades. So a long time. So this isn't a quick turnover. So that type of red flag is relieved. And then it's also, and on the call, he talked about how he recently became a grandfather. So I totally get that. And so he's saying, look, he wants to switch gears, and recognizing, the type of gear you need to be in to be a CFO. He's saying he doesn't want to be in that, that high octane, position anymore. Now it's, get on the floor and hang out with the grandkids. I totally get that perspective. And so even though initially it's a red flag, I think you give him a pass for this, especially because he's been with the company for so long. But just given the changeover, the change that you've seen with the co-CEO, the head of sales, it was worth, sort of digging into. Looking at the fundamentals for Paycom, I'd say this is what you want to see. 98% plus recurring revenue, 9% revenue growth, increasing profitability, net cash balance sheet, no debt. This is a beautiful setup, and this is why I previously gave the thumbs up. I'd say this growth and improvement in profitability is really notable given the fact that they are investing even more in the business. And you can see how their cost of revenues went from 17% to 19%, how their R&D expanded by 27%. So they're clearly investing in the business. One of the key products that they're investing in is called Beti, which enables employees to do their own payroll, helps with automation, also leveraging AI. And during the most recent call, they talked about how Beti, this relatively new product, rolled out in the last few years, which has caused some problems for them because it's so good, it actually results in companies running extra payrolls less frequently, and that extra payroll is where the payroll companies historically made a lot of money. This is drawing from my own personal experience as prior CFO, where we would occasionally have to run an extra payroll, and it was expensive. I can tell you, if you have a product that cannibalizes having to run a payroll because to correct for something, that is a way to save money, and arguably that hurt their revenue. That has been a headwind for them. And they talked about how, look, we have this existing client, been with us for 6 years. I love this type of recurring revenue. 2,500 employee company. They adopted Beti. They reduced their payroll team by half, and the payroll process, making people get their checks on time, that previously took 4 days, is merely in hours with Beti. So this is from the transcript. Once again, you can see that at AI Ticker Chat. And to have this type of case study, that does reinforce an example in my mind that this is why they deserve to win. And they currently have around 5% market share. They're growing faster than some of the behemoths like ADP, Automatic Data Processing, and Paychex, both of which are much bigger than them. They're growing, single digits, whereas Paycom's growing high single digits. Maybe they're able to reaccelerate from here. I'll talk about that in a second, but it is worth understanding. This software market is hyper competitive. 5% market share, a lot of different players, and there are some smaller players that are growing slightly faster. So that is something to be mindful of. You do have the Paylocities of the world. I think the Paycors as well, world growing slightly faster. That said, Paycom's still growing around 10%, and they are growing and taking share from the big players. So that is something to be mindful of, to watch, how are some of these other players doing. So is Paycom deep value? What are my thoughts on the valuation? First of all, as always, this is not financial advice. Quick plug, recently a premium member of the Unrivaled Investing community shared, direct quote, "Currently the profit I've made thanks to Call That Ideas from Daniel can pay for 30 years of subscription, but the most valuable part has been the learning experience. I've been a very satisfied member since June 2022. Since then, I've never doubted to renew. If you're looking for compelling ideas, go to unrivaledinvesting.com. One of the quotes from the recent call that really jumped out at me was how management called out that their unit growth, so selling more products to and businesses, actually accelerated, growing 24% in the second quarter. Year to date, 15%. So that's a significant acceleration. Then they talked about even more acceleration in July. So seeing that does make me think, okay, the change that you've seen with the sales executives, that's in the rearview mirror because you're starting to see an acceleration in units. It hasn't translated into an acceleration in sales, but this could be a leading indicator. This is another reason why I'm favorable about the stock, and I'm still giving it the thumbs up. On this channel, I oftentimes give some thumbs sideways or thumbs down because it just doesn't, the value isn't there. It's too hard for me. Like I did a video on Intel, too hard for me. Maybe it works out, maybe it doesn't. Too hard for me. You're talking about cash burn and partnership contributions. This is a much easier story. They're controlling their destiny. They're investing in the product. They're growing. They're outpacing their major competitors. Lots of free cash flow. And to see this early signs of acceleration, this is what I really want to see. This makes me even more favorable, even though the stock has gone up slightly since I previously called it out from like 145 to 155. I do like to see that Paycom management is taking seriously the fact that their stock is likely undervalued, and so they're upping their buyback to $1.5 billion. This is a relatively new announcement, and management, effectively calls it out, saying, "Look, we're mispriced relative to other companies that aren't growing as fast, have a higher multiple, don't have the balance sheet that they have, the resilient business model." They've retired something like 4% of their shares outstanding over the past year, and so that means they're buying back stock around current prices, arguably around $150. So you do have that element as well. So not only do you have a recurring business, but you have the management saying, hey, we're going to take that cash flow and plug it in. So you do have sort of a backstop. I wouldn't say a full backstop, but a semi backstop with the company buying back the stock, which, at the valuation, I'd like to see. What I don't like to see, though, is that the founder, Chad Richardson, just can't seem to stop selling shares. And this is part of a sale program, an automatic program to sell nearly every day a couple $100,000 worth of stock. Personally, I just don't like seeing this, because if you do believe that the stock is cheap, you can cancel that program and say, hey, maybe I'll revisit at some point in the future. I don't think you really need the funds. I mean, just look at the Warren Buffetts of the world. Like, he didn't sell stock for decades, and then he did for charitable donations. I don't think Chad Richardson personally needs to, but look, everyone has their own different circumstances. I don't know, why he needs to sell several $100,000 every other day. I don't like to see this. I wouldn't put it as a red flag. I'd say a yellow flag. I don't care for this. This gives me pause, especially because with my own personal investment journey, and this is part of the reason why I haven't bought Paycom for myself, is I want that alignment. So even though Chad Richardson owns a lot of stock, I don't like the selling every day. It just rubs me the wrong way. And I'd rather find something where management, is saying, hey, I not only, own a ton, but you know what, I'll buy even more. And I did call out a company like that to my subscribers, in the last few months. And I'll talk about it again in this week's letter, where the founders, buying more stock because he thinks it's so compelling. But overall, this is a yellow. I wouldn't say it's a red flag. It's a yellow flag. Another element for investors to consider, this is a payroll company. So that means they're going to be sensitive to the unemployment cycle, particularly in the US, though they are expanding internationally. And that has been at record lows, since COVID, around 4.3%, ticking up slightly. So if you do see it tick up in the future, like it did during past recessions, that would create a headwind for the business. So that is something for investors to be mindful of, because if you have unemployment ticking up, it makes it harder to, let's say, upsell incremental features for a payroll business. So something for investors to be mindful of. I run, Paycom through AI Ticker Chat's predict feature. It's saying it has tremendous upside, roughly 200% plus a lot of cash, gives it a lofty multiple of 35 times a few years from now. So it's saying 200% upside over time. My personal take, I'm going to be a little bit more conservative. So using my hypothetical valuation framework, of course, stock price can go higher or lower. I'm assuming a tighter margin range. I'm assuming a lower growth rate of 8 to 12% over time. And I'm assuming a lower end multiple over time. I'm just more cautious. AI is saying, hey, maybe it should be higher. I'm saying more cautious. I can make the case, though, that AI is right on this and that I'm too conservative, because when you have a product that is talking about acceleration, 98% recurring revenue, clean cash balance sheet, I mean, they could lever up if they wanted to. Generally, payroll companies don't do it just because you don't want to blow up, but you do have that element. And so looking at this and the cash flow that's accruing to shareholders, that's 4.5 to 5% in free cash flow over the next 5 years per year based on the current share price that they can buy back stock with. So I'm thinking on the low side, once again, stock price can go higher or lower. I'm thinking on the low side, you're compounding at high single digits. High side, around 20%. Not a lot of stocks have this type of setup. It's trading around 20 times, 21 times, in line with the market or slightly cheaper for a business that I think is higher quality. So overall, I continue to give Paycom the thumbs up. I like the setup. I like to see the acceleration in the business. I like to see the continued and upped buybacks. So there's a lot of favorable things. I like to see them taking market share. And so there's a lot that I like to see. And so that's the reason why I wanted to call it out. I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.